Peace and blessings, everybody. Y'all already know what time it is. Sauce Factory Wednesdays. Welcome to another episode. Okay, so we are here today. This is the cheat code technical analysis class where we break down the cheat code algo and odds and ends, how the best way to use it, and all of the tips and tricks that I have for you, and some great technical analysis. Right. So we're gonna have to, since this is the last month of January, we're gonna run this thing back and how to add the indicator back to the chart. So you're gonna go into indicators, scroll down invite only once you get the invite. Then you're gonna go down to these right here. Here's the new album. But it's for the V5, right? So you're gonna click your squeeze swing combination, and then you have your V5 algo. So you click that, this is how it's gonna appear, right? But this is fresh out the box. This is the heat map version of I don't like that. I like mine a little more custom. You feel me? I like mine different. So I like to switch over to blue scale. That's what rocks with my spirit. Yeah. So I want to get this all set up. First, I'm gonna start with the squeeze and the swing. Go ahead and switch those joints over to the blue scale. Okay. And then with my squeeze, let me cut on my bullish and bearish divergences so I can make sure I see those in the market. And my other piece of resistance, let me click my main trend MA and scroll down to my hall, MA, change that to a 20. Boom, done there. But I want to come back up to my swing. I got to do some more adjustments, right? So I'm going to come down to where it says zero level right here in the middle. I'm thinking this line up, and I want to kind of make it stand out. So I'll use the crosses. So I'll make it a little bit thicker, and I use the crosses so it can get a nice little appearance like this. It stays gray. In the new version, we can't change the color of it, so it just stays gray. So I just kind of change the pattern so I can, see the difference. And boom, that's done. Now we get into this algo. Come over here, and then I'll also remove the clouds, take those off, and bar color. We on that blue scale, baby. Mm, same thing. And then from there, I also use hollow candles. So I'm gonna go ahead and take off plot candles real quick. So the plot candles is the RSI built into the candles if y'all don't remember or don't know for people who have been in class for a while. So that's the RSI built into the candles. That's the reason why they change in the colors they do. Okay, so the lighter the color, the higher the RSI is on the bullish side, the darker the color, the lower the RSI on the bearish side of the market. Okay, so from there, boop, 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 I got everything I like in there. All these other settings I'm leaving alone because I like them. I got my change of character, break of structure. And what we have here today is Capital One financials. I know everybody got a Capital One card in their wallet. They always talk about, what's in your wallet. That's what I'm smoking on Capital One because they was in a bullish trend last week. I closed the position Monday, but I liked it. What started it off was this nice little boosty candle here, right? And then we followed by a buy signal on the weekly chart, led to this nice little run we have here. Yeah, everything got live at 5 here. Right? So another indicator I also like to use is a MACD. So they're just for additional confirmation, right? But we ain't regular degular over here too. So for that, see, we ain't regular, we special. Okay, turn that white. Brighter. All right. Okay. So what I like to pay attention to when I'm doing my top-down analysis, I'm looking at the market, right? If you look at the last couple of Wednesdays when we was going over fair value gaps, order blocks, this, that, and the third. So when I approached this chart, because I was trading into this week over here, right? I swung a call position over the weekend. I noticed we had a fair value gap, right? So boom, we had a fair value gap, price trading into it on this week of the 16th. That's the reaction. That's more than 50%, about 50% of this previous candle here, right? Wanted to hit his mark. Then from there, that was a reaction or breakout. Now, this high was the breakout level. I wanted to see price kind of take out. And it did exactly that. I wanted to see a reaction here with force. So that way you can trade accordingly, right? So you had a reaction to the fair value gap. FBG, fair value gap, people. FBG, y'all should know. Right? So we had the reaction. Boom. Morningstar pattern. Price take out the previous high. Clear for a nice little up ride. Okay. So once you get to this week, this is our high, right? Now it is Wednesday, so price is trying to come down. So you gotta look at it, hey, it's retracing right now. It's perfectly fine. But when you start looking down, let's say we want to go down to the daily chart, right? This is what you're looking for. You're looking for a nice clean breakout. If you didn't catch the reversal, once again, we got another boosted candle. They had earnings, cool beans, whatever, what happens with that. But they still had a nice little run. Must have been some good guidance or something, right? You had to break a structure, what the algo gave you, and then price coming out at the last high. Anytime you want to take a breakout trade, especially in stocks, I don't like take reversals and breakout trades. I wasn't here for the reversal part of the trade, but I was available for the breakout. Once I seen they made progress on the weekly level, right? Because that was down here was the last week candle. So once they took that out, then I know, all right, we're making progress. Then once they took out the last swing high, then yes, we just made a new high and we can possibly push up. This was a nice trade. I took about 30% off of it. Then it started drawing back down to rebalance this candle here, right? Because when it did do all that fancy stuff it did, it left an imbalance, which is totally fine. That happens, right? But that's happening when you come out with some force. Come out with force, you're gonna leave an imbalance. So you gotta understand that will take place when you get these strong candles. That's why I say anytime you get a strong candle, price will have to come back and rebalance that. So you must recognize that and know when to exit the market. Now, I was looking at this trade on Monday on a 1 hour chart, and I got out at the high. Monday, here we go. Session breaks. Okay, make sure nice and clear. So I'm looking at price, right? Doing this. What made me concerned, I'm looking at all my oscillators here, right? This is where you pay attention to. One, I had a crossover on my MACD. I seen the histograms on the MACD losing momentum. That's a signal. If the momentum is leaving out, that means they're shifting the market, right? The K2 lines are getting close. They starting to arch. So I know like, hey, things about to go down. This is a bearish divergence, right? So that's how you want to recognize that. Like, boom, it had a little sign right there. Momentum leaving out. Instagram's curling over, but price shot up. It's gapped up this morning, right? Now I start watching my squeeze. My squeeze started looking like it wanted to give out, right? And I'm looking at the swing. It wasn't really just giving what it needed to give. So as I see this candle drifting down and I look at all of this, I choose to take profits here. And then I was waiting for a price to find a nice happy zone of support to kind of rebalance this candle here. And then once it finds support, I probably would look to try to take this up again to see what else I can get out of it. But the main key part is great exits, how to exit a winning trade without giving up all the profits. Because I know a lot of people love to have diamond hands. I was looking at this movie over the weekend. Dumb Money is the like the story of the GameStop traders who rode GameStop from nothing to something. And some of the people got out in a great situation. And it was some bad tails in there where some people still holding the bag, hoping to get back to what they had. in reality, a simple stop loss, right? A simple say, hey, this is a top, I need to exit. So let's cut off this part of the chart here because this information is unnecessary, right? We want to cut off, there we go. Let's cut that off. And then we're gonna go down to a lower time frame. I like to use a 12-minute. Y'all can use a 15, whatever you want to do. I use a 12-minute chart, right? Now, you clearly see this. Boom. First opening candle. Created a gap this Friday, this Monday, right? They created this gap. Okay, cool. Small little gap, about a 1 point gap, but they created. The problem is not them coming back to retest the gap. They failed to bounce, right? So it's another little dead giveaway when you're looking at price action. Price can come into the gap, right? But need to find support and go out the gap to continue. But when price come into the gap and find nothing and continue going down, it's bad for business. Okay. Price should never have broke this low. It should have held. This low should have held, right? The moment they broke this low, that's how we know the trend is over. The moment they put this bearish engulfing in, the trend is over, right? This is not good signs. Now, you don't want to be sitting there holding a bag when things start going bad. I always tell people when things go bad, don't go with them. And this is one way to figure it out. You have price jump up this high, come all the way back down, because let's put this key. If you look, it'll tell you where this candle open up at, right? Boom. The candle opened up at 139, got to a high of 140 and 86 cents, right? It got to that high. Boom. And then start coming back down. That is bad business for them to flip that candle. They didn't have no give to say, hey, we're going to push this up higher. So that means they gave all it can get. After that is no return. Any candle get wiped out like this, with no follow through, no pushback, nothing, they are driving price lower. When you looked at the chart, they had an agenda to go get, and that's what they need to go get, right? Now let's go down to a lower time frame, like a 3-minute chart, and then we're gonna just look at the lower time frame. So when the bell open up, I know a lot of people like to see what's gonna happen. Let's look, let's wait, blah 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 blah. But it's other indications that's showing you the market is breaking down. You need to exit. This was your first 3-minute candle. After that, you had a doji, no follow through, followed by what? A bearish candle. So this is your even star pattern here, right? That is a bearish reversal pattern. And you see in the market break down, then followed by what? 3 candlestick order block. That is a bearish continuation to the downside. This is to the downside, right? So this is your bearish continuation. So we're gonna put that sell right there. Boom. Now, since they did push price up kind of high, I like to extend the box to this wick to give it a little more buffer of how high they can actually take price when they come back to these boxes. Remember, they will trade back to these zones, right? So typically you go from wick to here, but what I realized, price will react to the high of this wick of this candle. So keep that in mind when trading this, right? So you see, they completely took the gap out, consolidated, did not go up, bell broke down. Boom. So you're still in there, you're just losing money, you turning a winner red for no reason, right? So as you see, they slowly start picking the market back up. Just, so eventually, let's see if we can, I'm gonna cut it and bring back the other price and see if they even try to do this. So, and they did. All right, great. So when you look at it, this was that initial bounce was looking at. This that second chance opportunity. They came back into the gap. Tested our order block perfectly. Tested it, dropped. Came back, got this volume imbalance right here. Boom, boom. Okay, this your volume imbalance right here. Bada boom. Came back in that zone, tested it, came with the 2 candlestick order block, rejection block, right? So this is a very highly traded zone now, right? You're getting all these different order blocks, volume imbalances, rejection blocks starting to form here. So that means this is a hot box for the trading. Once they came back just to touch this order block, notice they only made it to the bottom of it. That means they really wanted to drive price down. So the buyers had their fun back over here. Now it's time for the sellers to get into this party. And this is the sad part. They get a lot of retail traders. I see it happen over and over and over again. Is you'll take this as an opportunity to say, hey, I'm getting my money back. Hey, everything's good. They'll just playing. They want to shake people out. They'll run the stop loss, etc., 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 whatever, right? Whatever excuses you want to come up with. But in reality, you should have got out way back over here. Not waiting to price to come back up, right? And this is when people get to drawing their fibs in the wrong direction, get to making up stuff, saying, oh, look, you know, they're going to start drawing it here on all this extra crap, you know, blah, blah, blah. Like, oh, it's going up there, it's going to go here. Realistically, this is the best way because the market shifted. So, you know, it came up to 50%, right? They'll go from the other way down and sell it, bounce upon support, and then go up. Reality, it's done. Once you start really looking at the chart, you start looking at the candlestick patterns they forming, you're looking at the blocks that's being tested and respected, you'll see the game is over. And they are literally rebalancing price and breaking down. Anytime they rebalance price at a quick rate, they're not waiting, they're not taking days to do it, they're doing it in a matter of hours and minutes. They are definitely shifting towards that downside. If they refuse to rebalance price like they've been doing in this little section over here, then you can probably say, okay, cool, this is going to be a quick reversal. They'll just running down and they'll come back up. But you notice they had a smooth trend down, smooth trend back up. Did what they needed to do here. They reworked price. Boom, drop down. Guess what? Filled the gap. On the order block. Because look, you had the bullish candle being completely taken out by the bearish candle, right? Smoked. Guess what they did? Let's zoom in because this is a special candlestick pattern, right? I tell y'all about this almost every other class about this candlestick pattern. So this pattern is done. They did what they need to do. Now this one is the new king of the zone, right? I highlight them just like this from top to the close of this candle, right? You can pretty much do to the top of the next candle body. And this is your rejection block. So I always turn these red because it's for sale, right? Now watch what happens. Price got right back up here and kept getting rejected. Price can get to the top of these boxes, sometimes wick a little bit higher, but they will get here and start rejecting. As you see, they just working inside this box, cannot beat this zone. In the moment you seen how price got up a little bit high, like I told you, on the lower time frames, it could be some imbalance inside of these wick here. Don't know. We have to go down to the 1 minute to see that. We ain't gonna do all of that, right? But from here, it's showing you like, hey, price is breaking down, and then boom, dump city. It's over. Wednesday hit, boom, gap, super gap, came back, rebalanced the gap. Like I told y'all, anytime they run it back that quick, that means they really gonna run price down or run price up. They didn't have to rebalance this candle today. They did this all in one trading day, rebalance that gap that fast. It was not plenty. They took all that back. Let me put my little templates on so they make sure we ain't getting too one-sided on the code. Okay, great. So once they rebalance the gap completely, and then they drove price back down. I like seeing these V-shape, A-shape reversals because it's telling me like, hey, price gonna pop again. Anytime they go straight up and straight down like this in a V-shape, typically price like to pop and reverse back in the direction it came from. But in this said case, Yeah, you had a fair value gap here, and you had another one here, right? That's why you get that initial here. See that? Get that initial pop there. They took care of that one. And then from there, they came back once they got their money together. They took care of this one. Just like that. And they played in the zone for a while until they finally get down. But remember, you also had this pattern right here. It's OB. I know spot them, got them over here. Once your eyes get trained for them, you'll start spotting these things. You'll see like why price react to them. You may not see them right away, but you see price bounce. Like this boosty candle didn't come for no reason, right? And actually went. Sometimes you get a boosty candle, they steep, they'll keep going. But in other times, we get this boosty candle and they actually run it. You probably in order block somewhere, or you see you hit a key level somewhere. Right here was our block, right? See how they touched it perfectly? Boom, went off. Ran up there, right? Did what they need to do, then shift it back down. Notice the highs. This is your high. They didn't take it. Last side. They did not take it. He didn't have what it takes. So this is lower high. Boom. Or low, lower high, boom. Market shifting. Break internal breaker structure. Shift down. Taking out liquidity here and here. Right. They're looking for liquidity down here too as well, but they have to come back, rebalance price before they can sweep this. Make sense, people? Now, once they ran this down, you see how hard they dropped it. That was your breaker, external breaker structure from here to here. That gave put a target on their back because it's called displacement. The moment they hit it down like this, they displace price here. So of course they're gonna come back and rebalance that with urgency. Okay, but they also, guess what? Remember, it was a fair value gap here. They have a new agenda here. That's a nice little block right there. See, all that nice little block. You have one here, then you got this one here, 3 candlestick, but they also got this little consolidation. So I like to pay attention to these consolidation points and tops. The price will come back up there. As you see, barely wick there. Nice V-shaped drop. Run on liquidity. Let's check that. So a boosted candle is strictly for the algo. It's a caution candle with the indicator. So it can come in all sizes. It can be a doji, it can be an engulfing candle, a little bit of anything, but it's the yellow candle with the indicator right here at the bottom or the top. They come in on different time frames. They can be bullish, they can be bearish, but it's key levels. But when they get that combination, that's what we call this an exclusive cheat code algo term, exclusive cheat code algo. You feel me? Yeah. What up, D-Boy? See you here? Yeah, so this is what you're paying attention to. This is what happening in the market. This is the part that a lot of traders are missing. Now, how fast did this chart get out of hand, right? Y'all seeing all of this? It got way a lot of hand just in a couple of minutes because we're on these lower time frames and we just sniping this information, right? The information comes and we're sniping it, and you see this chart got real messy real quick. So it's very important to try to look for this information on higher time frames so you have to worry about getting this messy, right? But you want to understand where price is going, how prices, what price is keying off of, what is hitting. These are the ways you do it. This is the information you're looking for. You're looking for these breaker structures. So when you're looking to get into a trade, go down, see what's going on, and say, okay, cool, I want to get the sniper entries at my level, but I want to get in where I have no drawdown or little to no drawdown. You're looking for these key components, like where price going to come. All right, market is shifting down. It's been shifting down for a while. I want to sell it down. Well, price consolidating right now is about to pull back for a discount. Okay, where price can go to? Find an order block. Find a place, the last swing place where they dumped it from, right? Look for price to trade there. You don't want to scalp it up there. You just want to be patient because the bigger move is when they shifting to take out the lows. As you see, they kept running these lows all day long, right? Boom. They ran this one. When they dropped down here, they took out this low and this low at the same time, right? So let me clean up some of this clutter to keep the chart. You know, I want everybody to focus on the wrong stuff. So let's clean this up. All this stuff been kind of squared away, so it's fair to say. They never took that liquidity out. We can remove this gap. Oh, they straight violated. So once they start violating the order blocks, take them off. Let's get rid of them. That order block is smoked. So they also took care of this gap. That's done. Ain't nothing to talk about on that, right? Boom. Currently, we're inside the 1 hour fair value gap, right? That got put in on a higher time frame. So this is what we currently, this the box we're currently trading. Now you see, put my markers. Took the low. Took the low, right? All with these two candles here, right? So they took this low out, break a structure. That's telling you the market is shifting down. Then they take this low, boom, break the structure, right? They took this little low out. So that's another sell side liquidity here and here, right? Once they took those out, of course, they're gonna pull back up because now they got the permission to say, hey, let's go run the stops, let's go collect some money. We got what we need to push price up because we got everybody to get out of their buy side positions. They call positions from here because you get a lot of traders on spin always say they fall asleep at the wheel. People fell asleep here. They said, oh, we're going up. They didn't wait for you to take out this high to catch the breakout trade to continue running higher. No, they took the reversal from here and they fell asleep. Like, oh man, it's the trade for the day. They reversing price. Ain't no way they're gonna drop it from here. And then you slowly start seeing it seep down. Then they had one last push that they seen it going sideways. Not enough people was exiting. Pushed down one last time. Ran for the liquidity. Took out the stops here and here. Because somebody got in here. Fell for the pullback here, right? So you look, we're in a fib from here to here. Template. But you look at it, right? It made a 65% retracement. Boom, looking good to the upside, right? Looking like they about to take out the high. So you took this trade that's great on your part, right? Let's say you got down here and you say, oh, it's coming back for the 60%. I'm going to double down or that's what I'm going to get in at, blah, blah, blah. You got in here, great. You got out there, great. But you got in here, take it back up again, great. But you got to know what's happening. It didn't get past zero. That was the last line of defense for resistance. It did not make it past that. So when it happened, some traders believe like, oh, we're gonna come down a little bit, probably retest the 38, probably retest the 50, blah, 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 blah. Come up with all these reasons, wrong reasons why that they can stay in this trade. And then this when institutional investors come in and mop the floor with them. That quick when the signs was there. The moment price shifted down here, came up and failed to make a new high, it was over. You go ahead and go home and dance over. Boom, boom, boom. That's the ball game. Ball game. There's nothing else to talk about. Moment, and the cheat code gave you change your character, right? They took this low. The moment they did that, you got to change your character. Boom. Change your character. Just told you. It's no longer bullish. Change your character red. Boom. It's bearish. So it's breaking it down. It's telling you it's breaking itself down. You can't make a new high for a market to continue going up. This should have been a higher low, followed by a higher high. It wasn't. This was a lower low because this made it a lower high. The moment you get that lower high, it's no longer a higher low. It's a lower low. So you can just flip it. Okay. Then that's when it's there. Lower high, boom. Low, high, boom. Murder, she wrote. These are little signs you got to pay attention to. This is what's going to keep you up on game. This is going to keep you out of trouble. Yes, both of them. The indicator with the caution candle before. It's both. See, this candle. You got to have both. Gotta have the indicator here with the yellow candle. That's the combination. But if you're not paying attention, you will not exit the market at a reasonable time to save yourself money or to refuse to take a loss, right? So this right here will save you from taking unnecessary losses. This also let you lock in profits and exit and say, hey, I played it to the best ability. I thought it was going to go more, but this is all I'm going to get. Cool beans. You have to be satisfied. Once you get to a point where it says, all right, it's reversing on me. I gave it room. I let it breathe as much as I could. It's breaking down. The market is shifting. It's doing something I don't like. Let me take this off the table, or at least let me put a stop loss in to lock in 10% of the profits, 20%, whatever you can. Get you up 40, you should at least have 15 to 20% locked in, right? You can let the other 10 to 20 kind of do what they want to do. Totally up to you. You know how you like to play things. You know, you're gonna be swinging for a couple of days, then yeah, you want to kind of give yourself a little grace, right? But outside of that, there's no need to give back profits. You don't have to. And this is how you do it. Looking at the market structure, reading the market, not overplaying your hand, having proper stop losses in place at reasonable locations in the trend, you find. Notice, you see how they swung it here, right? It's at a swing here, swing here. They took that out. That's how you know you'll see some form of trouble. The moment it came back and it failed to come past this candle, that's how you know you'll see some trouble. They gave you a second chance opportunity. They are not all the way crooks. They will give you a fair shot to get out. Most people refuse to take the deal. They, in the famous words of the Godfather, I'm offering you a deal you cannot refuse. That means it ain't no. You say no, it ain't gonna end well for you, my boy. It ain't gonna end well for you. So you want to start taking these deals, take the hints, see when a party's going south, and exit gracefully. Don't get kicked out, thrown out on the street, you tumbling, gotta pick your shoe up, your shoe flew off when they threw you out. Nah. Exit gracefully. Say, hey, I understand I'm no longer welcome. I'm taking me and mine and we're gonna go ahead and leave. We're gonna exit. I'm gonna take my money and we're gonna exit the party. I'm no longer welcome here. And that's what the market does. It gives you the little signs, but if you do not read the signs, you do not catch those signs, you can find yourself in a world of pain very quickly. Down a lot of money too. So that's one of those things. All right, people. You have any questions so far? Any questions? All right, no questions? Okay, smooth. So let's go on here, shift over to another chart. It's a higher time. Oh, QCOM. That was another good one. I like QCOM. That was another good one I took over the weekend. And we're gonna back out to a weekly on them. Oh, okay, great. So we all understand what's been going on with NVIDIA and everybody else, right? Everybody built the same little base here. So everybody built the same base. Got to change the structure, right? Chico gave it to you. Internal breaker structure, external change of character, right? Price trading up, great. Everything fine. Like I told you, I pay attention to these tops. Right, price running out. That's what they traded back up to. When you targeting these things, they want to come up. So you got a fair value gap here, followed by this cluster demand zone here, right? So you have other things back here, but they really wasn't too concerned because this was kind of bunched up. QCOM is not a top semiconductor, right? They in the running, but we already know who's on top. NVIDIA, AMD, you got Intel, right? Intel used to be number one. They cheese slid off their crack and never got back on. Me personally, I think they fumbled the bag a long time ago, refusing to do what it takes. Right? They trash house now. They ain't getting that position back. Nvidia got them. They got the game in a chokehold. Followed by AMD. Personally, that's my personal opinion. It is what it is. So when Nvidia ran off on a plug, AMD ran off on a plug, and everybody else ran off. These boys also ran off. Now, here's the difference, right? This is what I like to pay attention to, the week over week market performance, right? Everybody come to Sunday class, y'all know what I'm talking about. I simply, do my little template, week high, and then I look at the week low, right? So this is what I did last week. I looked at it, I said, show pushing price back down, back into the previous week. So let's go to the daily chart real quick. I'm like, QCOM ain't out. They ain't them people. They ain't the boys. They ain't got it. They ain't them. They more like Dax Prescott, raw quarterback, right? They choked. They got up to the top and they choked. Thursday they started choking. I got into some puts because I knew they had all these gaps to fill. I said, I want you. I like it, and I want you. I'm gonna take you there. I'm gonna take you to the dirt. Okay. So I'm looking at the market once again, looking at my oscillators, right? Looking at the position. Boom. Regular bearish divergence. Right? Popped in. I was like smooth selling. So I'm just riding away. Got down to a low. It started finding support. I don't like when the market finds support. I like to get the heck out of Dodge. But when I'm swing trading, I'm watching the hourly chart. I'm looking at how the market breaking down. I'm watching the candles. I already knew they had a lot of imbalanced price on QCOM, and they wanted them boys. They wanted them. And I said, oh, they gonna get that gap right there. I said, oh yeah, okay. I said, oh, they breaking down? Oh yeah, say less. I'm there. I said, no, don't worry about it, my boy. Don't worry about it. It's that splat. I hit with that splat. Okay. So when you get this nice hammer candle, right, coming in, and they slowly start like, wee, boom, wee. Yeah, I'm like, oh, it's over. So pay attention, right? So start looking at your oscillators. Blow the MACD, let's blow the squeeze and swing them, right? The moment that thing cross below that zero line, it's murder. It's murder, she wrote. It's bear territory. It's bears. Yeah. Yeah, pull out the furry joint. It's bear season. Yeah, it's done. The moment it cross below that zero line, especially on the higher time frame, it is done. Smoke salmon, baby. Pull out the pit. It was giving you indications over here. Boom, boom. The hog got away from the squeeze. So when you got this separation here, the good old separation, yeah, them boys don't want to talk to them no more. Yeah. Cheese started to slide. It's telling you the cheese about to slide. Get ready. The cheese slide and pull out your charcuterie board. All right, you good. Start dumping. Look at your oscillators. That's why I say it's very important to read your oscillators. Understanding what oscillators are there for and reading them properly will let you get in and take full advantage. Looking at your MACD, right? Boom, MACD failed to make new highs. Every time it came up, boom, cheese sliding, right? It's letting you know cheese about to split side. You feel me? It ain't came back yet. It ain't came back yet. Okay? Not happening. It's not. This is just it's over. Especially when they got this little separation and they straighten themselves out like this. Oh yeah. When it started getting janky, this is the thing you want to pay attention to the MACD, right? Quick lesson on it. When you start looking at the K2 line, especially blue, and start getting a little wiggly and start curling over, yeah, it's about to get real. This little interruption, they mean they fighting. But when it starts smoothing out, that's a smooth ride. Found support, okay, you wait. If you're scalping it or day trading, you take profits when it starts finding support, especially if it's above the zero line, right? You want to take profits because it's not good for your health to be sitting in something that's finding support. If you're selling it down, right? Your oscillator's still in the bullish side of the market. Okay. You don't want to be in this. It was setting up the biggest bearish divergence ever. That's why I showed up on the daily. It was showing it up on the 1 hour, right? So you seen this. Price took a little dip here. Boom, found support. And then it popped up for a little bit more, right? It came down some more. It was showing you the divergence was coming in. So you knew it was coming. You just have to be patient. But this is what I mean. The MACD above the zero line, the swing above the zero line, still in bullish territory. Even though it's coming down, it's in bullish territory. So do not get caught up in the foolishness. It didn't get real until it started getting closer to the lower side of the MACD numbers. It started getting close to the zero line. That's when the tank really happened. Okay, always keep that in mind of where this thing is located. If it's above the zero line on the bullish side of the market and you're in a bear position, understand if it finds support, it can go up pretty high and that can tear up your position. That's how you understand great exits. So if it give you 10%, 15%, get the heck out of Dodge. If it find any form of support, that means the bulls are still there. You are in danger. You behind enemy lines. You will get smoked. Okay, you smoke like a little brisket now. Don't do yourself like that. Don't do yourself like that. You know, on barbecue. I'm gonna have this flip with the sandals on, with toes out, the towel on the shoulders. You know, flipping you over on that pit. Don't do yourself like that. So go on ahead when you see it's coming down and it's still in the bullish territory, you're selling it down. You know you're doing a counter trend trade at this moment. You might want to heed the levels of support. So when it comes to support, get out. But once the oscillator's on your side, yeah, you smooth selling, baby. Yeah, yeah. Now you the one pit mastering. You feel me? You got the spatula. You flipping the meat over now. You know you getting it good now. Yeah, yeah. This is you over here. This danger right here. You gotta know what you're doing. Get in over here. Yeah, yeah. You gotta be smooth. You gotta be in and out, real quick. You know, real quick. You're just getting a little sample real quick and you'll get up out of there. Now, once it's go, when it's ready and it slide down like this, yeah, that's all day long. The sell position over here. Want to be careful. Get yourself in trouble over here. But down here, oh yeah, that's you, my boy. That's you all day. You go ahead, put your feet up, enjoy yourself. Mm-hmm. Yeah, yeah. So I'm trying to tell you now. I'm trying to put you on game. Pay attention to when and where to put your feet up. You can put your feet up once the oscillators get on your side. Once they got to the zero line, they start breaking down. Oh yeah, you put your feet up. You good. Now over here, yeah, this will get your block knocked off. You crying, then the market tanking, and you wondering like, man, I ain't going back in there. They tripping. Nah, you came in at the wrong time. There wasn't your time to get in there. You was partnering with the wrong crowd. Your party was over here. You over here with the wrong party. You see, that's what happened. It's the wrong spot. You know what happened. Don't do that no more. Let the oscillators get on your side. Take the trade, right? So you can even go down. Once again, I use a 12-minute. Y'all can use a 15, whatever floats your boat. And you just watching it breaking down on the lower time frames. Just watch it. That's where it was at, right? So that little dip was that. And then boom, it's coming back up. You had a hidden bearish divergence, which caused it to go sideways, but they still forced this up a little more, right? Just like we talked about on Capital One. The moment they took out this bearish engulfing candle, it was over. Murder, she wrote. They could not get back up there. Okay. And that's when things started getting janky. MACD didn't get as high as it was. It started slowly floating down. The moment the swing got below that zero line, murder, she wrote. I told you, the moment it goes below the zero line, it's over. It's over. Rain is gone. Like this song goes, rain's on the way. Yeah, it's over. It's done. You got that little green box in there. Yeah, they was really driving price down. They had to come out so they can breathe a little bit. The green box letting you know they're driving price to the dirt and they trying to get up. They let them up a little bit to breathe and they took their behind right back down. But when they came back and they crossed the zero line, like, yeah, that's still a little stiff pullback right there. So you want to be careful. But other than that, same thing. The charts, let's bring this back up. Oh, wait, let's look at this. We had a little red box here. The little red box had to breathe. That's why they drove price down like they did, right? That was that sharp drop on a higher time frame. But right here, same thing. All these charts do the same thing. They just do them. Some of them may do it a little bit faster than other ones. Some of them may do it a little nicer than other ones, but they do the exact same crap. All right. Boom. Boom. That's your gap. They can come inside the gap. They should have went like this and went off. They did not. If they come inside the gap and go off, that's a gap continuation. That's a great pattern. That means they're gonna run. If they fail to get out of that gap, ooh wee, my boy, it's over. It's over. Okay. It's over. Go on ahead and shut it down. Go on ahead, holiday. Better switch sides. Better flip. If you're on trial or something, you better snitch. You're going away for a long time. You better go on ahead and tell them boys what they need to hear. Want to get up out of there, take the deal. Your partner in the other room taking his, you know. Seen him eating that Mickey D's. They ain't give it to him because they like him. Yeah. Take the deal. They driving price down. Look at the bad end of this. So you see it shifting down, putting in new lows, putting in new lower highs. Boom. Then they have nerves to gap down on you. Come on, now you still holding cows. You tripping with yourself. Yeah. So don't do yourself like that. Treat yourself. Don't mistreat yourself, people. I try to beg this. You know, I tell everybody this all the time. Don't mistreat yourself. Treat yourself. I can't stress this more than enough. But this is how you exit your market with decent profits, or at least a break even, or a small loss. One of the two. We can get you down to a 5%, 10% loss, seeing that the market is shifting against you. We can get you down to a 10% win or a 20% win, seeing that the market is shifting against you versus losing the whole entire position. Because that's what tell a lot of people up in options. That's what tell a lot of people up in futures, by letting the market slide against you so much because you're refusing to let it go, is what tearing up these accounts. So learn when to give up. Say, this is the deal I need to make. I need to get out of Dodge here. I need to exit. I need to take profits. I need to put a stop loss in place. Recognize that on the chart, exit accordingly, and save yourself some time and hurry. Right? Save yourself a little bit of pain. All right. Yeah. Questions, comments, concerns. Yeah, what y'all got for me?
Yeah, Neo, can you tell me, because I don't see those red and green boxes on on my indicators. How do you set those up?
So they on there automatically, but price must get to an extreme point. They just don't show up just because price is going. So let me show you real quick what you'll be looking for. So you see this green line here, and it's the red line here. Once the swing goes below or above that line, that's when this box shows up.
Once it goes below what line?
The green line. See this green line right here?
Okay.
Yes, once the swing goes below that, that's when it starts showing up. Because that means it's oversold.
And it will happen automatically. I don't have to do change any settings.
Uh-huh.
It will happen automatically. I don't have to change any settings.
Yes, sir. It will do it automatically.
Okay.
Yeah. It's an automatic feature.
And so when you see something in that green box, that's indicating that it's a strong downtrend.
On the lower time frames, yes. It's definitely indicating a strong downtrend or a strong uptrend, right? So if we go up, let's jump up to the 1 hour chart, right? Same area. Oh, wait, let me go back. Let's put a little, let's highlight this real quick. And where it came out at. That way we keep track of this on the 1 hour chart. So where are we? There we go. I think that's where I put this. Let's clear this out. Okay, let me go back, make sure these same two lines. Okay, that's where we at. Cool. So go back to the 1 hour chart. So you're looking at it, right? You see how the swing is spread apart? That's telling you it's high. So the more it opens up, the higher the momentum. So that means they dragging momentum down below the zero level. So they had to get it down below the zero. So that's heavy selling pressure. So it wasn't over, because the 1 hour still had to come down below the zero line so you can get in line with the other ones. That's why they had to kind of bounce it up, because price ain't gonna go straight down, ain't gonna go straight up. Right? So we go down to a 30-minute chart. Let's see what we got here. Boom. So we got a box over here, right? because they finally got it that low. But you see what happened. They was also below the zero level, and they was dragging it down to the levels. And this is what it kind of fizzled out because they had to let some buyers step in, pick it up, so they drop it back down again. That makes sense.
Okay.
Yeah. So
Yeah.
that's why I say it ain't gonna show up on every time frame. It's just when they in a nice strong trend, you'll see it on the lower time frames because they capping out that time frame oscillator. So it has a certain percent that it can go low that is, calculated in there. And once it gets down to that level, that means, hey, it's extremely oversold for this time frame. But for as other time frames, that this could be entering a strong downtrend or uptrend on a higher time.
Okay.
All right.
Gotcha. All right. Thank you.
No problem. My pleasure. Okay. All right. Any other questions, people? Before we shut it down?
I got a quick question.
Yes, sir.
So let's say you're doing a swing trade, like you said you did a swing like over the weekend. What's your mindset as far as like how you coming in and looking over your chart to see if you're still in good shape or if you need to exit the trade?
Well, here's the thing about swinging over the weekend. When Friday close, it is what it is.
Not even just swinging over the weekend. Let's say like a Monday to a Friday swing.
Oh, Monday through Friday. Okay, so I'm gauging it day by day, right? With here, let's clean this up, and then we'll put on the session breaks real quick. Show you what I. Well, I'm just gonna be constantly checking for progress in the market. So as we see, every day it breaks down, right? Cool. So I want to make sure, whatever the high for that day is, I don't want to see my price get back up there. I don't want to see that at all. That's my threshold. I don't want to see price get past this high. So long as it's steady making progress, taking out lows, and shifting down like this, I'm perfectly fine. But the moment it finds support, and I'm looking for support on a 1-hour chart, not no 12-minute, nothing like that. I need to see weakness on the 1-hour chart in my trend. If I see any weakness on the 1-hour chart, I'm exiting. But if everything look fine, I'm holding steady. That makes sense.
Got it. Yeah.
So if I start seeing the MACD or the squeeze, swing, anybody, see the squeeze and the swing, they ain't too much of a tell. They ain't gonna lie to you, right? But if I start seeing the MACD start looking like this, and I seeing price going sideways and it's pulling up more than I'm comfortable with, then I'm gonna be looking to go on lower time frames and for an exit. If I can't understand where price is pulling back to, I'm just gonna say, well, I'm up. I put a stop loss in place just in case. I don't want to let this trade go red because I can always get back in, especially when I'm not up by a whole bunch. I'm gonna always look to manage that trade. So if I'm up by 20%, I'm gonna manage that trade a little bit tighter because it can easily go red, and once it goes red, it's hard to get that money back, especially trading options, right? So if you up 20%, you might want to take it because that means price ain't really moved that well anyway. You can probably get a new contract with the same profits. You can probably get a cheaper contract, or yeah, because it's going on sale now. So once they do this, the contract's going on sale. You can probably get a cheaper contract close to the money. They're gonna perform better by what day is this? This is Monday, so you held from next day over. The contract already lost in value, especially at the end of the day. Every time after lunch, it kind of takes a little dipper, right? So you want to just look, all right, let me take a little bit, let me look for a new position, and then flip and go back down, right? But in most cases, if everything looking fine, you're gonna sit there and enjoy yourself. Makes sense.
Yep. Got it. Thank you.
No problem. But yeah, swing trading, it's a certain mindset and attitude you got to have when coming down to it. But once you get it, you good to go. All right. Right, people. So that is my time for today. Yeah. I hope y'all enjoyed this. Stop the video. Stop the share. Y'all